But let me just move very quickly to Nigel. Nigel, of course, you've been arranging already transaction. You have experience from coal to power projects. So can you tell us how you would normally de-risk these projects, especially at the early stages?
I'm not sure that de-risking the project is obviously for the benefit of someone. So obviously we have to look at de-risking it for the lenders and to some extent for the sponsors. But as we were discussing yesterday, trying to get the project to a position where not simply the investors and the financiers are happy, but also the off-taker is happy and the government is happy is, I think, the real challenge. We closed the project you referred to, we closed the Mambacoris project last year in Zambia. And a big focus of that early on was to ensure that our off-taker, ZESCO, had a position where it could not simply have a desire to purchase the power, but also was able to put itself in a position where it could afford that power. And so a lot of focus was on where ZESCO were going to sell the power, at what price they were going to sell the power. And they were very open about that, and that helped to bring the project together, and was a very key part throughout that process. Even then, it took a long time to close the project from the outset, and negotiating things like the PPA were the least difficult part of the project in the end. It still took a long time. And really, probably, the main reason why it takes such a long time is because very often we're dealing with firsts in projects, and we don't often get to the situation where we're repeating that deal or we're doing another deal, which is exactly the same as the one we did previously. Until we get to a position where we're doing that, when everyone sort of understands the risks on both sides of the table, until we get to that position, we're not going to get all these projects closed that we want to get closed. But we have to start somewhere, and the truth is that in terms of de-risking for lenders, there are so many sort of different ways in which we can do that. And again, that didn't prove to be a particular problem for us because there are many projects. Even though we had a coal-fired project which took out probably about 80% of potential investors and potential lenders, we still were able to raise finance. We raised about $515 million initially, and then we added another $75 million after financial close. So actually raising the money there was not the issue once people were comfortable with the way in which the project was structured. The way in which we tend to look at the risk for each project, though, tends to be on a project-by-project basis. And so we tend to look at each project and say, well, how can we solve the particular problems of that project? It is going to be a lot easier if the utilities in each country are structured in a way that enables them to finance sensibly all of their power needs and all of their power projects. And that is a challenge, not just for the utility, but also for the governments. Because I think governments tend to say to utilities, well, look, restructure yourself in this way, behave like a commercial organization, but then don't necessarily follow through and allow that utility to behave like a commercial organization and to set the tariffs at the levels which mean that it can afford to purchase the power and can afford the power developments that we want to work on. So until that sort of political will is there as well, I think there's always going to be that struggle.
Thanks very much, Nigel.
Doing business in Africa. You can't afford to be without Africa Investor.